So this is the Nasdaq 100, and this week we will get quite a bit of answers. And there's specifically something that happened near the end of the week that caused a lot of concern. And we discussed this semi in the last video. But as we dive into this, it's going to lead to a lot of questions, and we could possibly see the trend break to the downside. Now, what I do want to highlight before we get too far into the video or even get started is that ES did have a complete SR flip at the $4,100 level. So we're seeing, in my opinion, a pricing in of a bad CPI read at the moment. There's kind of this going notion that we think there's going to be a bounce on Monday, but right now I think it's too risky to be playing any of that. Now, when you're going to projections and you're looking at what we expect on this data, from previous viewpoints, you have to expect a drop and a decline. But if we look at what's happened based on these revisions, it has to change your tone. Then we start to look at energy, and these are just a few things we have to look at in this video to get a better look of the market moving forward. This is not going to be a short-term review, but more of what to expect in the coming days and weeks. So before we get into that, I have to ask you to do two things. Of course, like and subscribe. It does tons. It does wonders for the channel. Every day here on the channel, Monday through Friday, I'm giving you updates so you know what to expect on the market. Quick day trades that I'm liking and everything in between. Unbiased as always. I show you the winners. I show you the losers. Primarily, I show you the losers just so we can learn from those, because you're always going to learn from the losers, in my opinion, better than you will from the winners. So let's get back into the video and get back to what's happening here on the market. Now, when we look at where we're at and how we're moving, it's been structurally fantastic, right? And we really had this kind of top tick on the second, topped out at our key level where we were targeting. If we go back to something like the daily, giving you a visual here, this was right basically at our target. You actually get a little bit of a wick above, but still great, good movement. And that's where we're at. We're getting a retrace. Now, before people jump to any conclusions and we start saying, oh, we're bearish and this and that, I just like to give people a viewpoint, right? And I continue to do this just to keep people level-headed. I think we have to stay balanced in our views of the market, right? We've gone over all this. Just ignore all this back here. But when we look at structurally the move that we've had and we continue to have, again, this is just giving you a view here, right? We're going to bring this up so you can see. We're going to go label, put that opacity back up right there so you can see. And if we look here and just go back and forth really quick. Sorry, that should be right there. Go to that retrace. And it's really quick showing you basically all the retracements we've had since the beginning of the year. And as you look here, we're going to notice a very common theme. And now we kind of have a pretty big retracement in comparison, but you'll see something very common happening here. And right now, I mean, really, this is you didn't get the bounce you really wanted, but here we are now. So far, and this is just showing you where we're at. So far since the beginning of the year, we did 2.6, 3.7, 3.3, 3.4-ish, 3.6 almost, and then now 5%. Now, where we showed this for the first time, where I went over this, was back here, which was better, like a 3.8. But if we look here, just showing you, you're going to get pullbacks in the market. This is definitely structurally a bigger pullback. Okay. Now, a few things we also have to identify, and this is giving you the bull thesis before we go over the possible, bearish downside push. You're holding the 200 SMA on the daily, and this is going to be on the Nasdaq, and the weekly on the Nasdaq. So you're holding two major supports right here, right? We go over to ES, we can see what happened here, going in here, and you can see we're well above the 200 moving average. Even with the rejection under 4,100, it's still important to understand where we're at. So we can still say you have a lot of room to retrace and not get destroyed in the market. But we're gonna dive into this consumer report. So, and this is CNN, and I wanted to use CNN for a reason, because if we look at news sources, I think there's a lot of concern of bias, right? And people wanting things to go their way. Now, when we look at a news source, I chose CNN to look at this, just because if anyone is gonna side against a recession or anything bad potentially that could affect, in my opinion, Biden, I think CNN would be the least biased on this. Personally, could be wrong, but personally, that's why I just decided to choose this article. So Friday, this released bad news. Consumer prices actually climbed in December. And so when we're covering CPI and we're going over, investing.com, I always recommend you guys use this if you want to look at what's going to happen on the calendar, etc. Right? When we're looking at this, I think you constantly have to be worried. about expectations. And I usually use past cases for determining my opinion for the next read, right? I look at what moves it right now, most likely energy being the biggest factor, and then where we are now and kind of what happened last time. But now all the data we've received, in my opinion, is kind of corrupt over the past 6 months. Has inflation probably been dropping? Yes, I would say for the most part, it has started dropping. It should. If we raise rates this high, it should be happening. But the concern, though, was unemployment and where does that stand? Now, the Fed's been twisting that for a good viewpoint, saying that it's helped, show resilience in the market and this and that. And I just want to say that it's not looking like it's been as good as we thought. And again, I have to say, and I am wrong to a certain extent when I'm looking at this, but you have to take into account if you're getting fed information that's wrong and then they twist the way that they are using that data and it shows that it's climbed on the past 2 months, it kind of skews your viewpoint, right? So I just want to identify that. And so we have CPI. This is going to be 8:30 a.m. Eastern, so an hour before market open on Tuesday. And so when I look at this, people keep asking me, I know if you're commenting here, you're like, well, what is your opinion on this, right? I could not tell you if I think it's going to rise or fall. When we're looking at this, though, and we look at month over month, they anticipate it to be semi-sideways, right? So they anticipate to come out at a forecast of 0.4, which is what it was previously at 0.4. Now, what we do know, though, this was the problem of looking at CPI. If we start to get readings from energy to the upside, I know inflation will start to tick back up. Why? We have unemployment still dropping. It probably rises a little bit this month just because it's at like all-time lows. But if we look at what's happening here, energy's been the ultimate catalyst, okay? And so if we go basically into December, and now when we're looking at December, they're saying even with this sharp decline on energy, that prices actually rose, okay? And now we're just sitting steady, looking like we're getting a basing period at this time and look like it wants to pop back up. I have to assume that this will not be beneficial for the inflation report, okay? This is kind of where things start off. And we saw what Russia did with their energy right now and how that's affecting us, and that's why we started getting this push back up here. And I think this is just a ticking time bomb at the moment, right? But I've always said, the moment where you start to expect a new low to come in the market and you expect real volatility to the downside is going to have to come from an inflation report based on data. You have to have data that says inflation is spiking back up. And we compared this to Australia about a week and a half ago. We've seen what's happened to their market and now they're getting hurt bad. If you don't know, Australia's inflation numbers, they just dropped drastically, similar to what happened or what is happening with our inflation numbers, but we saw them tick back up. And then their market took a slam. And that's the concern here. Also going into what Japan's doing, if we understand their market, and giving you a visual, if the JXY is doing well typically versus the DXY, the Japanese index versus the dollar index, typically the dollar when it drops in comparison to the Japanese yen, the market is in a risk on mentality. USD JPY, I recommend following that to a certain extent. Don't spend all your time there. We saw what's happening with Japan's inflation and their concern. So we have to wonder, is what's happening with China foreshadowing what's going to continue to happen in the market and maybe the black swan, if you will. Now, yields, I've been keeping an eye on them. What did I say we wanted to see? We saw the double bottom here. People were talking about it. I said, but look, we need to see continuation. If we see continuation, that gets me concerned. Okay, that would be the part that I'm like, I want to be cautious for the upside and probably play the downside. Looking at yields again, the 10-year rising, but what about the 10 versus 30? We saw a 90-year, the 99% inversion start to happen once again, as we can see here. So we got it back to about 99% inverted right here, dropped down a little bit, and that's where we're at. So what does that basically mean? And giving you a visual of this. So you got to this point where the 10-year was rising rapidly versus the 30-year. And this has predicted this has predicted almost every economic crash that we've had over the past 30 years, roughly. Okay, so if we look at 2018, this was a huge issue. If you don't remember, during Trump's era, this was a really big issue when it started to invert, but we used a lot of our monetary policy, and we were still set up to probably go into a dangerous area. And that's why when COVID hit, the yields instantly shot up, because we didn't have those tools to use, and we still don't really have those tools to use now. For instance, when we cut rates, usually we don't cut them back to back, and we usually don't raise rates back to back to back to back to back. However, we got so low on our interest rate policy, down to zero essentially, that we just only could raise and raise and raise once we started. Your housing bubble happened here, .com bubble back here. So giving you food for thought. So I want to highlight that you're still just trending at highs, okay? You definitely broke that, the high or lows that you were continuously making, but you still look terrible here, okay? You need to identify that and understand where you're at here when we're looking at this specifically, okay? So that's my opinion there, is yields are definitely showing concern. TLT, also, I've been tracking this for you guys. What are we looking for here? If you can remain above 100, you like it, but if you start to break below this trend, it looks really bad. I definitely think we could start seeing more pain here. The 200-day SMA, look where you're at. You're starting to see signs of weakness here. Once again, this is the concern for me, that you came up to it almost perfectly right there. Boom. And now you're breaking below this line on the daily chart. So you are seeing those signs. But again, I want to highlight and say this right now. People get mad when I say highlight, but the factor of this week that will give you the answer will be CPI. Now, the next thing I want to say into this is I fully expect CPI to rise over time. I think CPI will bounce back or be higher than expected, okay? Even if it's not this meeting. Now, with these revisions, I didn't think that we would have the rise in CPI at this meeting until we got these revisions, and then it made me question essentially all of my due diligence I've done, just based on how they're reworking it now. So for me, going into the CPI, it's the most cloudy I think I've been when I'm looking at these reports. And again, I try to always be transparent with you. And I definitely think when you're talking about something or giving your opinion on something, if you have a platform, and I believe I do have a platform here, and I feel like I have the responsibility to be transparent at all times and be honest at all times. I don't want to give a definite or even a strong opinion on something if I don't feel confident in the answer I'm going to give you. So that's where I stand with CPI. So if you ask down below what I think is going to happen with CPI, you just got your answer. So that's where we're at there. Now, going back to indexes, and people, you always say, Tyler, talk about SPY, Tesla, this. Look, end of the day, indexes are king. Okay, they're your best friend. They're going to give you your direction 100% of the time. If you want to know where Tesla's going, follow the Nasdaq, follow the SPY, follow ES, right? If we look here on about the 4-hour time frame, we can see also some stuff that started to happen here, and this was a major concern of mine. So go to the 2-hour. So on Friday, I marked this out as a supply. Jay didn't really think this was a supply in Discord. I still believe it is based on how you based at this time, and then dropped. Multiple rejections showing signs of weakness. But we did see buyers' resilience to try to hold you at these levels. So this was important also. But your demand to the downside on the 2-hour time frame, it's about 12.1 on Nasdaq. So going into Monday, based on these revisions, I still expect a little bit of downside personally, okay? That's my opinion. I think right now we're trying to price in a bad CPI reading. But that being said, the biggest thing I want you to take away from this is I don't believe we can price in a bad CPI reading. And what do I mean by that? If CPI rises at all, I still think we come out with a bearish reaction. Okay, so for instance, at our last CPI meeting, we priced in the upside move. I believe Morgan Stanley said they expected a 2.53% move if we come out flat at what we expected. And we got that 3% move literally the day before CPI. And then when CPI came out as expected, we dropped. And then we kind of came back to break even, right? So we priced it in. There was no real movement. But if we look at what's happening with this, I believe you could possibly be priced in with some of these revisions, but I don't think the market will price it in fully. Personal opinion, that's my viewpoint here. So even if we have some downside into Tuesday and the reading comes out as a miss or higher than expected, I fully believe you will see downside quickly in the market. So I don't think you need to rush into a position. It's just like what happened back here, okay? And I love to use this as an example because it shows traders that you don't have to time the top or try to catch a knife, right? Where did we flip bullish here on the channel? Remember where we did. It was right here, guys. That's where. So if we really identify, we only traded half the move to the upside. And remember, so on this trade here, we averaged all the way into about 11.7. We were up nice, and then we got stopped out right here, right? We lost about 35 to 4 grand on that, right? 3,500 to 4,000, right? And then on the upside move, we demonstrated that we made almost triple to quadruple that amount onto the move to the upside, right? So once you get that trend, it becomes your best friend, right? That's the thing you have to identify. But before that happened, we didn't have that trend established, because then we had the touch and then touch, and we just kept trading it over and over. So that's what I just want people to identify here is you don't have to time it perfect. Just identify when the market establishes that trend. And then that's when you hone in, and that's when you make your trades or make your focal point trades, if you will. So that's what I want people to identify here is if you start to break below 12,000 after CPI, then we're looking at it from a viewpoint of we have some serious downside here most likely, and we could start really moving back towards that downside here. Giving you a visual of Qs, you're going to have a lot of illiquidity here. You break below 290, you get pretty illiquid down to 281, okay? And so on. So you need to understand that. Same with SPY. You need to identify what's happened here. That's when people say, well, you need to be going short. You need to be going short. You need to be going short. I'm like, you don't need to be doing anything. You can be very patient right now, because on SPY, this drop could really come in hard and come in very fast. So you have to be able to identify what's happening here. Just like we traded to the upside, it wasn't that hard, right? Once we got the breakout, we saw those illiquidity areas on specific equities, and we took advantage. You're going to have the same opportunity to the downside if it happens and if you put yourself in that situation. So right now, I think all eyes directly on CPI. Be cautious. It's a sit on your hands type of situation, in my opinion. But again, the revisions have me worried compared to what I was looking at the past week and a half, 2 weeks. The revisions were a giant red flag for me. I think they got to get you concerned about the market. Also, with what's happening with China, what's happening with energy overall, we could start to see those effects slowly rolling in. And I'm going to say right now, I don't expect this to be the worst of what's going to happen with CPI. I fully expect that to happen closer to summer when energy prices are to spike, and same with rents. So with this CPI reading, I think rents have the opportunity to continue to the downtrend. And I also think energy isn't quite spiking yet, but it's on the verge of doing so. So that's why when I'm going into this, before the revisions, I expected it to be a decent reading back to the downside, and we'd have more upside. But since the revisions, I'm like, look, I just don't know how we're going to price in energy right now and what's really happening here. So these are the viewpoints we need to be worried about and talking about, and that's what you need to be focused on. Again, like, subscribe, do what you got to do. I'll see you tomorrow. We'll have big updates on stocks I'm liking and quick picks I'm liking going into after CPI, because again, we're going to have better price action understanding of where we're at specifically. Have a good one, and happy Super Bowl Sunday, boys.